Today we will talk about 7 types of crypto tax nightmares. Meet yoga instructors, limo drivers, and real estate agents who have been held and back. Thabo Abati, a CPA who does accounting for cryptocurrencies, has seen plenty of tax nightmares. But this one still gets him. His client was a yoga instructor. She lived in New York and made less than 50,000 per year. And in 2016 she started trading crypto. On Twitter she found some crypto trading influencers and used their advice to make traders. At first she only invested a little bit of money, but the traders worked. It was 2016, and if you just threw a dart at a coin, you would make money back then. The yoga instructor, emboldened, decided to place bigger bets. Why not make some real money? So she started to trade on margin. She mostly copied the trades of some crypto trading influencers, and once again they started to work. She took around $1,000 of capital and turned it into $1 lakh. She had done it. Then the tax bill comes due. Sad party. The yoga instructor would have been fine if she sold her $100,000 portfolio and tucked a portion away for taxes. But of course, she did not do that. Many crypto traders don't. Instead, she kept trading on margin and eventually she lost all of her crypto. Now she had to pay taxes on this $100,000 capital gain, but with nothing left in the bank. The tax bill was basically more than she could earn in a year. Welcome to our stories of crypto tax nightmares. They usually look something like this. You mess around with crypto, you make some money, you don't think but about taxes, then the market drops and boom, suddenly you are underwater. Crypto Reddit is littered with these kind of sad stories, such as the office assistant with a salary of $47,000 who racked up a $50,000 tax bill, but he could not pay, concluding that I feel like I might have accidentally ruined my life. Or the crypto trader who realized in horror, my country will get marginally richer because I fucked up my tax planning, and that after they will take everything I have, I will still be in debt for the rest of my life. From conversation with tax experts, these nightmares come in 7 forms. I will tell you about these 7 nightmares one by one. Number 1 is the buy in a bull market, sell in a bear market nightmare. The biggie, they usually look like this. I found Bitcoin in 2017. It was so exciting. I started trading the altcoin trying to make more Bitcoins. The vice president of education and marketing at Swan Bitcoin, a service that offers automated Bitcoin buying plans. I made hundreds, maybe thousands of trades, he noted. Svensson had never traded stocks before. He had never traded forex. He had never traded anything. And he had no idea there was tax implications also. He never set anything aside, and in the meantime the price of Bitcoin cratered. So when tax season rolled around, I had to sell over half my Bitcoin just to pay the bill. Svensson is in the fine company. That is definitely the biggest moment. CEO of Crypto Traders Tax, a tech software startup. He saw this dynamic in both 2018 and now in 2022. We have had it twice now, Kramer said. A huge bull market leading up to the end of the year, and then a bear market when people need to liquidate to cover their taxes. Or take the plight of a 31-year-old real estate agent in Chicago. He dabbled in trading altcoin back in 2017, he said. This dabbling made him around $650,000 in profits. Like Swanson, he had no idea he had to pay taxes on these trades. And when the tax man came, his crypto holdings plunged by 50%. I was seriously screwed. He owed $120,000 in taxes, and to pony up the money he had to liquidate his Bitcoin at the very bottom of the market. Not only did it hurt me financially, but it also was a pain in the ass getting all my trading information and manually recording the trades one by one. Yet another example of the sad story, Kevin Cage, who worked in cybersecurity, thought he had a good 2017 trading crypto. His once modest account soon swelled to several $100,000, even though it was mostly just pure luck and gambling. And you can see where this is headed. The market crashed, the tax bill arrived, and he had to liquidate his holdings to pay the $100,000 tab. It made me sick to my stomach, said Cage. He lost sleep, he cut back on restaurants, scrapped plans for vacations. It is the worst feeling in the world, he said. People think you made a lot of money in crypto and you've talked about the wins, but at the end of the year, wished you took your profits. This one has a happier ending, although Cage bounced back, is a crypto millionaire living in Puerto Rico, and 130,000 people subscribe to his trading videos. Number 2 nightmare is the magic crypto money nightmare. Many people think that once you have swept your fight for Bitcoin or Ethereum, at that point it is the realm of magic crypto money, and then for days or weeks or even years nothing is taxed until it is converted back to fiat. No, I wish it worked that way, said Kammerer, but he sees clients regularly guest hosts because they misunderstood how it works. This one guy had acquired 100 Ethereum early on in 2015, back when it was still cheap, he said. And then in 2021, he sold some of his Ethereum to buy non-fungible tokens. Thinking it was all in magic crypto money land, he racked up over a $100,000 tax bill. It was shock to him. Number 3 nightmare is the transaction hell nightmare. Another common nightmare, making a flurry of trades across a range of platforms: Coinbase, Binance, FTX, Qcoin, Ubui, and on and on. And not keeping records of your transactions, each trade is a taxable event. In 2017, Michael O'Connor used a bot algorithm to automatically make trades while at Uphold, a trading platform, not 10 trades or 100 trades. I had like 20,000 to 30,000 trades, she said, laughing now. Oops. O'Connor solved the nightmare by becoming TaxBit's first customer. She was so impressed with the tax software startup that she later joined the team as the vice president of marketing. Number 4 nightmare is the fleeting wealth nightmare. In 2017, Shehan Chandrasekhara, the head of tax at CoinTracker, once worked with a limo driver who traded crypto as a side hustle. Driver made $150,000 in profit, not too shabby. Maybe he could go from driving a limo to owning a limo. Concerned person asked the limo driver, "Hey, do you have the cash to pay your taxes?" The driver was stunned. He had not thought about taxes, and by the time his tax bill was due, in an all too familiar story, price had fallen and he sold at a loss. He had never seen those kinds of gains in his life, and the driver had to set up a payment plan with the IRS. There are so many stories like this, said Chandrasekhara. Whenever the market goes up, that is when all the people rush into the market. People got into Bitcoin around $69,000 and now they are underwater. Nightmare number 5 is the passive income nightmare. In 2017, all holders of Bitcoin were airdropped sums of Bitcoin Cash. One of Cameron's clients owned a ton of Bitcoin, a whale, and he was airdropped $2 million worth of Bitcoin Cash. He did not realize that the IRS treats a hard fork as a taxable event. said Kramer, and he was later slapped with a surprise tax bill. That said, it is hard to shed too many tears for someone who receives $2 million literally out of thin air. But a more relatable nightmare. Let's say you are generating yield or providing liquidity, said Kammerer, such as receiving interest from the compound token. Every time you are getting those rewards, that is taxable income. Number 6 nightmare is you pay taxes quarterly. A lot of people think you only pay taxes at the end of the year. That is not the case. As every freelancer knows, you are expected to pay quarterly taxes if they are not being withheld from your paybacks. But that is also true if you are buying and selling NFTs. If you are just selling NFTs on OpenSea, you have to do that or you are going to get penalized. Number 7 is the future nightmare. Finally, the most important nightmare is the one that you don't know about yet. Many of the horror stories that tax beats O'Connor had from the 2017 tax year were not felt by her client until 2019 or 2020. What people don't realize is that the IRS is on a 2 to 3 year lag, she said, but just because you did not hear something does not mean you are not going to. So if you have a sinking feeling in your stomach, then you flubbed your crypto taxes, but maybe it's okay because the IRS did not notice. You can breathe easy in a decade. Thank you very much.